It is nearly the 2-week anniversary of Facebook's IPO. We are at the NASDAQ market site where the new issue actually started trading. Henry, what's been even more impressive besides the scope and the magnitude of this issue is the way the options market has taken to it. Over 365,000 contracts traded at its debut yesterday, Tuesday, May 29th. That's huge. The next closest was GM at 65,000 plus.
That's right. I mean, it was an incredible opening for a new issue. I mean, it's all, obviously coming from the kind of exposure and hype that the IPO had. But I mean, right out of the gate, the option volume was insane. We actually were thinking it might, and even this morning it was really heavy, and it was actually neck and neck with Apple for about the first 20 minutes.
So you think you can get up to like another 300,000 contracts traded today?
It looks like it. It was a busy morning, and then it slowed down. The stock's looking kind of unchanged right now.
Now, for its initial day on Tuesday, what was the breakdown in terms of calls and puts, and what does that really mean? Was that more of a hedging exercise, or were we speculating?
It looked like the flow was included. Looked like it was a little bit heavier on the hedging side than speculation. Out of the 360,000 contracts, puts outnumbered calls was about 5 to 4. Right. Those near-term June 30 puts were the busiest, and that is pretty clearly hedging. People just kind of worried that this thing has already come down a pretty good chunk, and they really don't want to take any more pain in the short term. Right. And then there was a little bit of kind of the longer dated stuff looked a little bit more bullish, but in the short term, in June and July options, yesterday at least, it was definitely dominated by defensive positioning.
So Facebook priced at 38. It's trading at 28.80 right now. Is the options market saying anything in terms of 1 month, 2 months out that we might get back up into the 30 handle?
I mean, the options pricing is very efficient. Basically, it's not. It's very hard to read a real prediction out of the option prices. The skew actually looks relatively fair in terms of the price people are willing to pay for puts that hedge compared to calls that that will make money if the stock stages a bounce. This morning, actually, it was the 30 calls in June that were more active than the other strikes. So that actually kind of shows you, maybe things are mellowing out. We also saw some outright volatility sellers towards the end of the day yesterday and a little bit more this morning.
Well, I was kind of surprised that IV was priced around like the mid-60s, which I thought was kind of low. And then you look at something like a Google where it's priced in the low 30s. Is that because there's more historical vol data to go on? Or it seemed really low, like the mid-60s for Facebook.
See, when the survey that we put out, one of the questions was, where do you think the volatility is going to be? The most common answer was actually 30 to 40. And then the second most active was 60 to 70. So, you don't have any track record to go off. People are comparing this thing to LinkedIn, to Groupon, and then also to Google, just kind of based on the market cap. So it didn't surprise me at all that it kind of came out, obviously well above Google, but a little bit below Groupon. It's really very close to where LinkedIn options are nowadays.
Okay, and to wrap up, fundamentally, what are your thoughts on Facebook in terms of valuation for the stock price?
I think that obviously the media attention is kind of negative lately. We're still seeing a lot of short-term defensive positioning, people trying to protect the positions they ended up with in the IPO, whether it was on purpose or accidental. I think people are looking at earnings, which is supposed to be in between the July and August. It's supposed to be in early August. And then you also have the lockup kind of looming. I think that 6 months down the road, I think people are comfortable that this company's not going anywhere. Obviously, they do have a cash flow. They do have a lot of cash. Short term, I think we could still see it bounce around, even down to 25. I mean, the biggest trade yesterday was a July 32.25 put spread, which really only makes the buyer any money under 29 bucks. So short term, I think we could still kind of see some pressure, just because the inventory is out there. Longer term, I think that things will smooth out. One of the last questions on the survey was, where's Facebook going to be in a year? And the average answer was $43.
Oh, interesting. There's a lot of upside.
So yeah, it's kind of short term, a little bit ugly, and longer term, if you can stick it out or maybe wait it out, looks a little bit more bullish. It almost
sounds like every macro analyst that's out there.
That's right.
All right.
So don't hold me to it now, but you know what? In 6 months, things will be rosier.
Great. So. Thank you very much.
Okay.